Good evening, everybody, and welcome along to this presentation brought to you by ATFX, which is all about how to trade cryptocurrencies and manage risk. My name's Chloe. I'm from Trade with Precision, and we work closely with ATFX to bring you these educational webinars. So before we get started, I'd just like to get you to take a couple of moments to read through the next slide, which is a disclaimer. So if you would take a couple of moments to read through this, and then if you agree with everything therein, we can proceed. Also, feel free to introduce yourselves. There's a questions box, which I encourage you to use. We like to keep these sessions as interactive as possible. So if you do have any questions or would like to introduce yourselves and let me know what it is you've been trading, how long you've been interested in cryptocurrencies, and anything I can help you with, then please feel free to do so. And then we just have one more disclaimer, risk warning there for you to read. So I'll just give you a couple of moments to have a quick look through that. And then if you agree with everything within, we can proceed with the webinar. Hi, Rajesh. Good to have you. Okay, so I think that should be enough time for you to read those disclaimers. And we have a very, very special treat for you guys today, because I'm going to be welcoming along David Borg, who is the new UK head of desk at ATFX. He's got a wealth of experience in Forex and crypto, but I will leave him to introduce himself. So welcome, David.
Thank you very much, Chloe. Just to confirm, you can hear me loud and clear?
We can hear you loud and clear.
Fantastic. Much appreciated. Very, very excited and looking forward to the session. For the attendees listening, my name is David Berg. As Chloe correctly said, I am head of the UK and English-speaking global markets for ATFX. I've been around the markets for some time. I don't like to admit my age, but it's around 13 years now, both as a trader and also as a client relationship manager. And what I'm here to do this evening is just to introduce myself, provide my contact details for anybody that has questions, queries, or would even like to discuss the crypto markets, as it's a huge area of interest for me. And I've been working with the majority of the major cryptos, say it's sort of the top 10 to 20 by market cap, for probably about the last 4 years. So it's not new to me, although I do feel it's very much still in its global infancy, and it's very exciting. So to introduce ATFX, we are a multi-asset global brokerage who have been going for about 9-something years now in total. We have quite a global footprint, including from head office in London with the FCA regulations here, but also Middle East with Dubai, and over in the Far East with Shanghai and Hong Kong as well. The platform that we provide for our trading clients globally is the very famous MetaTrader 4, or MT4 for short, on which our advantages tend to be our very quick, what's known as market execution. So we're what's called a straight through processing, non-dealing desk broker. And the actual spreads themselves, the difference between the buy and the sell price, we're also very, very competitive on, including what I'll mention as our slightly higher equity account, which is called the Edge account, which has some of the most competitive spreads, I think, anywhere in the market, with the added bonus of no commission. So you only pay the spread. That aside, we provide CFDs and spread betting for our UK clients. What we offer for the crypto is what Chloe's going to be going into tonight. It's 4 of the very largest by market cap cryptocurrencies out there, including the enormous Bitcoin. So we offer Bitcoin, Ethereum or Ether, Litecoin, and also XRP by Ripple Labs, which is of course very popular and I think has gained quite the notoriety over the last couple of years. It's an exciting market. I won't go into deep depth about the crypto market, but it's very, very exciting. It's certainly the fastest growing asset class I've seen for some years in terms of its attention, speculation, and certainly in terms of its volatility, which of course produces the opportunity as well as the risk. So I think you guys are in for a real treat with the technical analysis and this session with Chloe, based on the fact that a lot of the volatility we seem to get in the crypto markets nowadays is driven by rumor, speculation, and of course by supply and demand as well. So to get a technical view on this, I think is fantastic. And I, for one, am, as I said at the beginning, really excited. I'm pleased to join this webinar. So that's all from me. If you have any questions whatsoever and would like to contact me, it's David, David, .berg, BERG, at atfx.com. If you do wish to call me, I will be in the office all day tomorrow on 0203 917 8717. On that note, thank you very much, and I'll hand you back over to Chloe.
Lovely. Thank you very much for that intro, David. Really good to have someone on board with so much, such a wealth of knowledge and experience. So guys, if I were you, I would take full advantage of those contact details. So without further ado, I will kick off. The agenda for today, we are going to be learning how to trade cryptocurrencies via contracts for difference, CFDs. I'm going to give you an overview of the 4 mainstream cryptos, those being Bitcoin, Ethereum, Litecoin and Ripple. Now, I'm sure everyone has heard of Bitcoin. It has been really high up in the news, certainly from 2017. Really, it really did fall into the mainstream news, even though it has been around for a lot longer than that. But there are other cryptocurrencies as well. So Ethereum, Litecoin and Ripple, perhaps not quite so famous, but certainly tradable nonetheless. So I'm going to have a look at the pros and cons of trading cryptos, managing risk when trading cryptocurrencies, and how to employ mainstream technical analysis to assess digital currency trends. And then finally, obviously, why choose ATFX? David has given you a pretty good insight into that, but we will go through a little bit more about that at the end. Now, we at Trade with Precision are trend traders and we are technical traders. And so what I'm going to do is show you how we can apply our traditional technical analysis, which obviously has been around for a lot longer than cryptocurrencies have been around. You know, we've been using technical analysis. I say we, not myself personally, but we as a population have been using technical analysis for many years. And cryptocurrencies are relatively recent, but we can apply the same principles of technical analysis to the cryptocurrency markets, simply because it is a market and markets display predictable behavior. There are patterns that we can look at and exploit. And there's, in that respect, not an awful lot of difference between trading cryptocurrencies and trading any other kind of CFD, whether that might be in the currency markets or the indices, or whatever it is that your chosen market has been up to date. So trading cryptocurrencies via CFDs. With ATFX, there are 0 commissions on crypto CFD trading. The trading is open 24 hours a day, 5 days a week. So this is different from trading stocks, for example. That's one of the reasons people really love to trade the currency markets, and cryptocurrencies are in that bundle of markets that are open 24 hours a day, 5 days a week. So whatever your time scale, whatever your other commitments are in your life, whether you have a job and trading is on the side, or whatever your lifestyle may be, trading cryptocurrencies is possible because of that 24-hour a day availability. You can go long and short, so you can buy or sell cryptocurrencies. And this is, a lot of people talk about cryptocurrencies in the kind of buying and holding respect. So a lot of people were talking about buying Bitcoin because the value was going up so high, and I mined for a Bitcoin back in 2008, and now I've still got this Bitcoin and it's worth a fortune, etc. And a lot of people might feel hard done by because they might feel that they missed out on that opportunity to buy Bitcoin when it was really cheap, and they can't afford to buy a Bitcoin now, and all of this kind of thing. But actually, by being able to trade cryptocurrencies via contracts for difference, it means that we can trade them without actually holding the Bitcoin, and we can go long and short. So much the same as we do with our currency trading and our commodity trading, we can trade long and short, which means that whether the value of the cryptocurrencies is going up or down, we can profit from the market either way. And it's a simple and easy transaction. As I've just said, there's no need to actually own the cryptos and worry about storing them in a digital wallet. Many people might have heard in the news perhaps that various digital wallets and places that hold these cryptocurrencies, they can be prone to going bust, for example. And if that happens and your cryptocurrencies are held with them rather than in your own digital wallet, then those cryptocurrencies are no longer in your possession, and it's very, very difficult, if not impossible, I believe, to get those back or to get your money back. So we don't need to worry about that when we're thinking about trading CFDs. We don't need to worry about worrying them, how we're going to store them, where we're going to keep our key or anything like that. We're just simply trading much as we do with the other markets that we trade. So a quick overview of the four major cryptocurrencies. First of all, Bitcoin. Bitcoin is by far the most popular cryptocurrency, with its market cap comprising more than a third of the total cryptocurrency market cap. So it's the most highly traded cryptocurrency, and it is certainly the most popular and most well known. So there are more than 16 million coins in circulation, significantly boosting its liquidity. Obviously, liquidity in markets is what gives us our ability to trade. It gives us our ability to buy and sell at a good price that is appropriate for us. It gives us the ability to trade with low spreads as well. So liquidity is very important in markets, and the fact that Bitcoin is the most liquid is certainly an attractive thing when it comes to choosing what to trade. And nowadays, companies like Microsoft, PwC, Subway, Overstock, Reddit, and Expedia, they all accept payment of Bitcoin. So not only is it something that has been in the media for reasons of the value exploding and really taking off, but it's also a currency that can actually be used to buy and sell, much as we can use the British pound or the US dollar, etc. Bitcoin can be considered the most successful of the cryptocurrencies. The massive price movements offer attractive entry and exit points. And being a global currency, Bitcoin is not impacted by any one country's change in monetary policy, economic indicators, or geopolitical woes. So that's something that a lot of people like about cryptocurrencies, is that they're not controlled by any central banks, and because it is a global currency, it's not impacted by, something going on in the US if Donald Trump is in talks with North Korea, or something going on over in the UK, for example, with Brexit. These are things that are really having huge effects on the markets, the currency markets, the index markets, and Bitcoin is much less impacted by these individual countries' events because it is a global currency, and that can be an attractive thing to be able to trade as well. Going on to, I suppose, the second best well-known cryptocurrency, which I believe is Ethereum. So the Ethereum blockchain has the potential to be used for an extensive array of applications. That's one thing I think is, one thing that fascinates me most about cryptocurrencies actually is there is a technology behind these cryptocurrencies that is actually really, really fascinating, and I cannot begin to claim to understand or even know an awful lot about these blockchain technologies. But from what I do know, they are actually really pretty fascinating, and I can completely understand why people have why cryptocurrencies have become a passion for some people, because they're interested not only or not even in the value of the individual currencies, but in the technology behind those and how it can be used. And that's how these coins have sprouted in the first place, is based on the technology. So Ether is a cryptocurrency backed by an open software platform. Launched in 2015, this platform for decentralized applications, called DApps or dApps, is being used for a myriad of purposes, from supply chain management to e-governance. And Ethereum has also become the platform of choice for ICOs, which are initial coin offerings. There are more than 19 million coins in circulation, boosting its liquidity. So this is also a highly liquid cryptocurrency. Moving on to Litecoin. This one was created in 2011 by a former Google employee by the name of Charlie Lee, and Litecoin is now a well-established cryptocurrency. It's considered an upgrade over its larger peer Bitcoin, and this is because the Litecoin network is significantly faster than that of Bitcoin. Any of you who do know anything about cryptocurrencies or have heard anything know that these cryptocurrencies are mined, and the amount of time that it takes to mine one Bitcoin, to be honest, I'm not sure exactly how long it is currently. It's been increasing over the years, but it takes a serious amount of computing power to mine one Bitcoin, and that means that the network is quite slow, whereas Litecoin is a lot faster. So Litecoin has been considered an attractive alternative to Bitcoin, as it offered faster transactions at lower costs. And with more than 54 million coins in circulation, Litecoin traders enjoy the benefits of high liquidity. So you can see how, even though Bitcoin is perhaps the most well-known cryptocurrency, in terms of trading with CFDs, it's not necessarily the only option, or even the best option. And it's fantastic that we've got 4 options here at ATFX of these cryptocurrencies that we can choose from to trade. And then finally, the last one that I am going to discuss is Ripple. This was released in 2012 as a real-time gross settlement system, RTGS, and Ripple was the first cryptocurrency that had a function apart from being a means of exchange or payment. Ripple is the name of the cryptocurrency platform, while the transactional protocol is known as XRP. Ripple transfer fees are significantly lower than other mainstream cryptocurrencies, and in addition to this, transfers are almost instantaneous. So Ripple facilitates the transfer of all types of currency, whether flat or digital. It has gained huge popularity among traders because it's backed by some of the biggest names in the financial industry, such as American Express, UBS, Santander, RBC, and Westpac. So we can see here across this range of 4 cryptocurrencies here, all of them have slightly different purposes, different uses, different levels of liquidity, all equally valid as trading options. So the pros and cons of trading cryptos. Obviously, there are pros and cons to trading any market. What we need to do is weigh up those pros and cons and make sure we understand the pros and cons so that we can profit from our trading when we're trading with these instruments. Cryptocurrencies are volatile, and this can be a pro and a con. So the large price moves can often form as sustainable and tradable trends. Volatility is essentially movement in the market, and as traders, we profit from movement in the market. So the fact that cryptocurrencies are volatile shouldn't be something to be afraid of, and it's actually something that we can profit from. So large price moves in cryptocurrencies often form really nice trading opportunities. Changes in market sentiment can be sharp and sudden, increasing the risk of losses being greater than expected. So this is the flip side of the volatility. Cryptocurrencies, I think perhaps more than any other instrument that we can trade, they're really influenced by rumor and speculation. So those of you who have been watching the cryptocurrency markets over the last couple of years will realize, I mean, I remember a time, I think it was back in November 2017 perhaps, the price of Bitcoin was really rallying, and I think there was an episode of a popular US sitcom or something like that that almost dedicated an entire episode to Bitcoin. And the value of Bitcoin went up even higher because people who may not necessarily have heard of Bitcoin then had it on their radar and decided to look into it and think, wow, this is something that I might want to buy. And of course, that pushes the price up even further on speculation of all of these people with an increased knowledge about the Bitcoin. And that was, just from one TV program, one fictional sitcom TV program featuring Bitcoin in one of its episodes. And there are plenty of other examples that I can think of where rumor and speculation has hugely impacted the cryptocurrency markets. And that means that we do have to be very careful, because the changes in market sentiment can be sharp and sudden, and the effects on the market and the cryptocurrency markets can be sharp and sudden. And that can increase the risk of losses being greater than expected. So we have to be very careful with our risk management when trading cryptocurrencies. Another thing, cryptocurrencies are unregulated. So the fact that cryptocurrencies are unregulated is a major draw card for many individuals. They really like the fact that they are unregulated. But an unregulated market by both governments and central banks can increase the risk of manipulation, hacking, and unregulated changes. So that's also something that we have to bear in mind when thinking about our risk trading cryptocurrencies. Risks, further risks trading cryptocurrencies, they are susceptible to error and hacking, and they can be affected by forks or discontinuation. So Bitcoin, for example, has gone through forks where the currency actually splits into two, and those two forks of the currency have separate values and separate markets. And we as traders don't know actually when that might happen. So that's another risk that we take when trading. So that's just a very brief overview on cryptocurrencies and the cryptocurrencies that we're going to look at now. So I'm going to take you over to the ATFX MT4 trading platform, and we'll go through how to employ mainstream technical analysis to assess digital currency trends live. So I will just take you over to the platform now. Bear with me while I bring that up for you. So here we go, and hopefully you should be able to see the trading platform up now. So what I'd like to do, actually, I do have some indicators on here, but what I'd like to do is strip things back. Perhaps we'll use Bitcoin for this example. I'm just going to delete off everything that I have on my charts to start off with. And then we can really just look at the pure price action on Bitcoin. And I'm going to look on quite a long time frame just to show you the real increase in price since 2017. I mean, you can see over here the price is really very low when the currency just started. Then there was a big raise in the price back in 2013, and a lot of people that I know who were starting to get interested in cryptocurrencies over here were really talking about this being a newsworthy thing. And then looking at price now, we can see that this huge raise in price here is just something else. It's on another scale to what we've seen in the past, and it really has become, as cryptocurrencies and Bitcoin have become more mainstream and more widely talked about and widely known about, people have started to trade them more, people have started to buy them more, people have started to use them more, and of course that has a huge impact on the market. So we can see this huge raise in price. These are very, very big bars in comparison to what you might see on, for example, a currency market or even an index market. And then going down to the weekly time frame, we can start to see some areas that we can apply to traditional technical analysis. So starting off just by using horizontal levels, I'm just going to draw a horizontal level on here, and we can see that this horizontal level price of Bitcoin was held up at this level for really quite some time. After price started dropping off back towards the end of 2017 and into the beginning of 2018, we see that price dropped off. It stopped at this level here and bounced, and we see this low test bar or rejection bar here, whatever we like to call these things. It's a rejection of this level, and since then price has pretty much been held up by this level. And it was only recently, I believe in November last year, that level broke quite suddenly, and since then, since that support level broke, we've then seen further price moves to the downside. We're now seeing price level off, and it's pretty much been moving sideways since it came to this next level here, which you can see back in time, back into 2017, the last time price was down at this level, it did react. So we can see how horizontal levels, we are perhaps used to seeing them in the other markets that we trade, and we can see here that even though this is a market that is hugely influenced by a completely different type of sentiment to that we're used to looking into on the other markets that we trade, even then, we can still apply our traditional technical analysis, and I've stripped everything back to basics. I'm just looking at pure horizontal levels. The reason that I first and foremost look at horizontal levels is to remind myself that I'm not trading a picture on my computer screen here. I'm actually trading a market. There are people buying and selling Bitcoins because they want to hold Bitcoins, and there are people making transactions on using Bitcoins and other cryptocurrencies, and there is an underlying market to trading, and that is what I'm doing. And therefore we have to remember that the prices that these currencies are trading at are relevant. So horizontal levels come at a price, and that price is relevant for whatever reason it might be. It might be the cost of mining a Bitcoin, for example. That is something that can hold up the price. When we look at commodity markets, the cost of mining gold or the cost of producing or farming cattle, or the cost of producing coffee, these are all actual prices at which the market is going to react, because those are important price levels. And so if we use horizontal levels and remember that there is actually an underlying market that we're trading, then we can start to use these levels to predict where price may get to, where price may react, where price may turn around, and then we can start laying on strategies over that. So going down to the daily time frame, this is where I start to think about trading strategy. And this is where I like to start to bring in my indicators. So I have a template that I already have set up here with my indicators on. So I've just got some moving averages here. Very simply, very commonly used moving averages, 50, 20 and 10 moving average here. And those just give me an indication of trend. I'm a trend trader. We at Trade with Precision are predominantly trend traders, and the reason for this is where the the market sentiment lies. So what we want to be doing is we want to be trading with the overall market sentiment. So when the market is falling and trending to the downside, we want to be going where the majority of people are going. We want to be trading in the direction of the majority. And so if the market is falling, we want to be selling. And the converse is true. So if the market is rising, we want to be buying, because we want to be going where the momentum lies, where the market sentiment lies. And so I'm always looking for trending markets. And this is why Bitcoin and cryptocurrencies have been so fascinating, because we can see here back in 2017 mainly, when this market was rising so much, we can see here that there's a trend. Now I've got my moving averages here just as a guide. They're all pointing upwards in the upwards direction, and price for the most part is above all of these moving averages, and that gives us an indication that the trend is up. And it also gives us areas to look out for where we might be able to take long positions, because of course with our trading, if we're buying, we're always looking to buy low and sell high. Trading cryptocurrencies is different from buying and holding cryptocurrencies in the respect that we want to buy and sell relatively quickly in order to take a profit out of the market. So we want to buy low and sell high, and we're not necessarily thinking about buying in August 2017 and holding the Bitcoin until November 2017 or December 2017. We're thinking about perhaps there are opportunities to get into the market and out of the market when we see the technical indicators suggesting that we should do so. So when we see these trends, that's when we really want to start thinking about buying. And rather than worrying about buying and holding and having to worry about the long-term prognosis for what is going to happen with Bitcoin, is the value going up or down, we can simply trade what we see in the technical picture, and we can just hold a trade for a few days, maybe a few weeks, get in at a low price, get out at a high price, take a profit, and then repeat. So we can make more consistent profits from the market, rather than having all our eggs in one basket, buying a Bitcoin and then holding it in the hope that price goes up. This gives us much more flexibility. So with this uptrend here, we can see that there are plenty of opportunities to buy this market each time it comes down into the moving averages. And we can also see that on lower time frames. So we want to be a little bit careful about trading very low time frames on cryptocurrencies, because they can be very volatile, and perhaps more volatile and more unpredictable than some of the markets we might be used to trading. But we certainly do still see trades on the slightly lower time frames, and we still see trends on those slightly lower time frames, and so that's important to be able to make the most of. We can see here on the 4-hourly time frame, just going back in time slightly, we've got an uptrend here, and we can see price rising, and again we can see price coming into those moving averages and giving us potential opportunities to take quite a short trade there. We're talking about being in this trade for only a few hours or a few days, and we can still make a reasonable amount of money. Now, one thing I want to cover, which I personally think is one of the most important things in trading, and that is risk management. The most successful traders are those who worry about their downside more than their upside. So they're not concerned about making money quickly, they're concerned about not losing money. And those that look after their downside and their risk are those that are more consistently profitable over the long term. And so we must be very careful to be placing our stop loss in a sensible place that's away from too much volatility. So we don't want our stop loss too close to price, and therefore we must risk size appropriately. We don't want to be going in buying Bitcoin with a couple of pips stop loss and expecting to make a lot of money in very quickly. We need to be realistic and set our stop losses in realistic places. So keeping them behind moving averages, or underneath levels of support, or above levels of resistance underneath levels of support for if we're trading long, above levels of resistance for if we're trading short, and that will give us the best chance of success. So I'd like to pick out an example, and I'm going to use this example here simply because it is on the chart. Now, what I'm always looking for, I'm looking for my moving averages to be in the correct order and pointing in the correct direction. So if I'm trading long, if I've got an uptrend, then I want that to be the case. I'm also looking for price action, pure price action, to be showing me a trend. And a trend is higher lows and higher highs. So just taking this bit of price action here, I'm looking at highs and lows. I'm looking at higher lows. So these are my higher lows in this uptrend, and I'm also looking at higher highs. So this is a high here, this is a high here. So higher highs, higher lows, I have an uptrend. So when I have that situation where I see higher highs and higher lows, and I also see my moving averages in the correct orientation, and I see price above those moving averages, then I'm looking for price to come back down to those moving averages so that I can look out for an opportunity to get in at a low price, to buy at a low price, ready for the next move to the upside where I can potentially take profit. So that's what I'm seeing here, is I'm seeing price making higher lows and higher highs throughout this period here. And then I see price come down into my moving averages at this point here. And what I have here is I have a bullish bar. This, whatever we decide to call it, whether it's a pin bar or a bullish bar, a low test bar, it is essentially what this bar means is that sellers have attempted to push the market lower, they've failed, and buyers have come back into the market. So it means that buyers are still in control of this market. Perhaps there was some profit taking up here with people selling off positions in order to take profit, which caused a slight retracement. And now buyers are saying, we're not ready to let this go yet. We're still going to push the market higher. And that's what we're looking for there. So that's a really, really nice opportunity. And we could consider having our stop loss nicely beneath the low, perhaps even beneath the moving average. And we would be looking to target, when we're looking to target, we're looking for levels of support and resistance. So for that, we need to scan back in time and see whether historically we have any levels of support and resistance. Now, this is another really interesting thing about cryptocurrencies, and Bitcoin here is a perfect example, because the price of Bitcoin has really come from nothing in very recent years. There are no historical levels of resistance. So that's all the more reason why we can really quite confidently trade a trend on these cryptocurrencies, because there's very little in the way of price going further up, because there's no historical data at these high price levels to show us any levels of support and resistance. So changes in direction, perhaps related to speculation on price, related to press releases, news reports, perhaps someone who is high up at a bank may say something, and then the value of the cryptocurrency might fall, for example, depending on what's said. Those kinds of things will affect the market, and those kinds of things we can't really predict. But where possible, what we want to be doing is predicting levels that we might want to take profit. If there's no level we can predict to take profit, then we might want to simply scale out of the trade as the trade moves in our favor, trail our stop loss so that we're locking in profits each time, and then we can continue to trade until the direction changes. So it's a pro and it's a con. It's a con in that we don't have much historical data to go on in order to choose our levels of support and resistance. Although now we're beginning to see more data, because we can start to see more levels of support and resistance as prices is forming these levels. So it's a con in that it leaves things slightly less predictable for us, but it's a pro in that it does mean that if trends form in at these high prices, they do have the potential to continue for a lot longer than we might even expect, and we can make profits for those if we're trading safely within the trend. So I do welcome any questions as well. Yes, indeed, that is a hammer-like candle that I was looking at. And as I was saying, whatever we call it, we can call it whatever we like. But what we're looking for is the price action within that candle, and to understand the market sentiment within these candles, and the fact that that candle is essentially a battle between buyers and sellers, where the buyers won because price opened at the top, the sellers pushed it all the way down, and then prices come back up and the sellers have pulled the price all the way back up to pretty much where it started, to say, we're in charge of this candle, we're in charge of the market right now. Thanks for your question, Rajesh. Sorry, I hope I'm pronouncing your name correctly. Just asking, how about using ADX to know the trend? Now, at Trade with Precision, we do have strategies that we specifically trade, and we have really whittled them down to keeping things as simple as possible, because there are so many indicators out there that we can use and so many sources of information that we can get influenced by. So even more so now than ever before, with social media and YouTube channels and all kinds of sources that we can get information from, and it just leads to information overload, really, and people can get very confused, and trading can be confusing if we don't learn how to pick out the information we need versus the information we don't need. So the Trade with Precision strategies use very simply a few indicators. We use RSI, we use MACD, and we use moving averages, and that's it. And that gives us the entries, the exits, the trade management of our strategies, so that we can profit from those. And so I can't actually answer your question about ADX because I don't personally use it. Sorry, I'm just reading through the questions here. Really happy to have questions, because I'm sure that if you have a question, it will benefit the others listening as well. So bear with me while I read through here. Good question. Good question. So I have a question here. You said you've been trading crypto for a while, with support resistance levels and price action and candlestick pattern recognition that I've mentioned. What is my win rate, reward to risk ratio, and my overall profit and loss? Quite a personal question there. I actually can't answer that for you, because I don't separate my cryptocurrency trading from my other trading, and I trade because I've been trading for a lot longer than cryptocurrencies have even been in existence and tradable. So I trade predominantly in Forex and commodities and indices. I do trade some stocks as well. My stocks portfolio I do keep separate, because that is a separate thing. But my trading within my CFD trading, which is what we're talking about here with trading cryptocurrencies, we're talking about CFD trading, and I do that with currencies, commodities, precious metals, etc., etc. And I don't actually separate my results out, because for me, I'm technically trading a chart. I don't profess to know about the mechanics behind Bitcoin, the technologies behind how they're mined, and all of these kinds of things. My brain doesn't have the capacity to learn all about that, even though I do find it fascinating. So for me, it is a case of applying a strategy that I know well to a market that is technically appropriate and trending. So I don't actually have a specific answer for Bitcoin. Now that you've asked me that question, I am actually going to go back through my trading journal and have a look at perhaps the last few months of results on cryptocurrencies and see how that differs from my regular trading, because you know, it's a really valid question, and thank you for asking, because that does give me food for thought. I honestly haven't noticed a difference between trading cryptocurrencies and all of the other things I trade. I would just say that I do tend to stay away from trading the lower time frames on cryptocurrencies. So when I'm trading currencies and commodities in particular, and indices, I do tend to trade on lower time frames sometimes, as well as the higher time frames. Whereas cryptocurrencies, because of the added volatility that can be a little bit more unpredictable, I feel more comfortable trading on the higher time frames. And that's how it is really nice to have a strategy that works across time frames, because we can make those choices. So I tend to stick to the daily and 4-hour time frames in my cryptocurrency trading. I can't tell you for sure that my strategy wouldn't work on the lower time frames. That's just where I feel more comfortable, because of the slightly added volatility and the added uncertainty due to the chance that it can be affected more by speculation and rumor. So moving on, I'd just like to have a look at the other cryptocurrencies that are available as well, because it's not all about Bitcoin, and all of these cryptocurrencies are fascinating. I'm just going to show you the monthly time frame, just so that you can see that the trend overall is very similar here. So Ethereum, we've seen that huge rally as cryptocurrencies were really coming to the forefront of people's minds in 2017. And then we've seen the huge crash since then. So we can see the same kinds of patterns here. Going down the time frames, again, we can see very similar patterns. So this is the weekly time frame now that I'm looking at. And we can see how that rally in the value of Ethereum, if we start to put some horizontal levels on, we saw a horizontal level here. So we had a level of resistance where price struggled to get through for a while. And when that level of resistance broke, it was a pretty spectacular break. That really was a strong move to the upside. And since then, price really took a long time before it even looked back, because there was just no other levels of resistance in the way here. On the way down, we all have heard that markets crash down a lot more quickly than they raise up. So this is simply due to the sentiment cycle. You know, people, their sentiment cycle is run by greed, fear, etc. And when people get fearful, when people see that the market is falling and they hold these assets, cryptocurrencies as an example, and they're fearful that the price is going to fall, that leads to a sell-off, which leads to the price falling, which leads to a further sell-off, and these things can happen very quickly. But we've seen since then actually that sell-off stopped at pretty much exactly where that horizontal level had formed. So we can see that these technical horizontal levels are still very, very relevant. Now price has settled down a bit, and it has been trending downwards for some time. What I notice here with Ethereum is that we had, over this period of time, a series of, apologies for my terrible drawing skills, series of lower lows and lower highs. That was our most recent lower high, and since then we've actually formed a pretty major higher low here. This is a weekly time frame, so that is a major higher low. So that's going to be interesting, whether price pushes on through this high level to form a higher high, or whether price bounces and ends up getting through this level. That's going to be very interesting to watch, and we can use our technical analysis to look out for trading opportunities within this price action that we're reading. So perhaps we may not necessarily be trading on the weekly time frame, but if we look at this on a daily time frame, perhaps we might start to think about is this going to form an uptrend now? And is this perhaps the right time to buy? Right now, I would say for me, I'm not going to buy this right now, but I'm certainly looking out at these levels. We've got a pretty obvious higher low there. This is my most recent high. So I'm just looking to see whether this is a just about slightly lower high. So we've got a lower high, we've got a higher low. Price is perhaps consolidating and getting ready to burst out in either direction. I don't know when that's going to be. So I don't know how much further price is going to consolidate, but what I do know is I'm going to keep an eye on my levels so that if price does break out from one of these areas, I will then be well placed to apply my strategy and start to trade in whichever direction that trend ends up coming in. Very importantly, I only ever trade with the trend on cryptocurrencies. So another cryptocurrency that we've spoken about is Litecoin. Again, to give you a look at the monthly time frame, and you can see the same pattern, this huge rally in 2017, huge fall, almost back down to where we came from. I'm going to put that on. In fact, I'm just going to draw that level in there. That is a previous high level from way back in 2013, and you can see price didn't stop exactly at that level, but it was pretty close to that level. So we might, had we been selling this as a downtrend, we might have started thinking about taking profits at this level in anticipation that price might bounce there. So whether price continues down further from there or not is almost irrelevant, but just being able to anticipate that price could stall at that level at least gives us a pretty good idea of where we can start to look at taking profits. And we can see on the daily time frame there has been a pretty overwhelming downtrend there. And so having that level in mind gives us a really nice place to start thinking about taking profits. Yes, price has gone down further since then, but it's really started kind of turning around since then as well. We're starting to see higher lows and higher highs creep in. The moving averages have swapped over, so they're all now pointing in the upwards direction. So perhaps it might be time to start thinking about looking at an uptrend and whether we can trade that. And again, looking at horizontal levels, that horizontal level has become relevant. Price did break through it, but it's come back up to retest it. And then when price has come back up to break through again, we've seen a retest in the other direction. So these kinds of levels here do give us a bit of an indication of where it might be that buyers could come back into the market, seeing this level of what was resistance broken through and now potentially become support. So the fact that price has broken back up through this level, which remember we drew on a monthly time frame from way back over here, the fact that price has managed to get up through this level is really significant for me, and that's something that I'm going to be looking out for in my trading now. I personally am much more bullish on Litecoin since price managed to break down through the level, but then recover and break back up through that level. So it's a very key level for me, and it does have a huge impact on whether I'm bullish or bearish on the market, along with my other major technical analysis, which is my higher highs and my higher lows. So let me just have a look to make sure I'm not missing any questions. Do I use oversold and overbought in cryptocurrencies? I do have my MACD and my RSI on the chart here. I don't actually use them as indicators of overbought and oversold. For myself, I'm trading with the trend until I see the trend come to an end, and I actually use the indicators as more as indicators of momentum rather than overbought or oversold. So I will go with the momentum that the indicators are showing me, and if that momentum agrees with the price action of the other technical analysis that I've already done on my chart, then that's where I'm more likely to take a trade. So I want to do my technical analysis based on price action. Who's winning, the buyers or the sellers? Where are my horizontal levels? What are my moving averages looking like? And where is price in relation to those? And then I want my indicators, my RSI and my MACD, to be supporting those decisions that I'm making. So I want them to be showing me that if I'm looking at an uptrend and I'm thinking about buying, I want my indicators to be showing me that the momentum is still bullish. And conversely, if I'm looking at selling, I want my momentum indicators to be telling me that price action, that momentum is still bearish. And also, that can help keep me out of trades where the price action looks bullish still and I'm still seeing a trend. But if the momentum indicators are changing and showing that momentum is slowing down, that might not be such a healthy trend. And therefore, I might want to think of either coming out of positions or certainly not getting into any new positions. So that's what I use the indicators for. So finally, I would like to have a look at the final cryptocurrency, which is Ripple. Again, I'll just look at this on the weekly in the interests of time, because we do only have 5 minutes left of the presentation. But you can see here this massive raise in price back in 2017. All of these have followed the same pattern. You can also see a couple of levels of support and resistance in here. We've got support down here. Let's see if that goes any further back. It is relevant over here as well. I'd like to look at this one on a lower time frame as well. I've only looked at daily so far and 4 hourly, but we can trade these cryptocurrencies on the lower time frames as well, and that's available with ATFX. You can see all of this data. We can look at the hourly data, you can look at the 30-minute data, you can look at the 15-minute data if you wish. You can see here, just looking at this most recent price action on the 15-minute time frame, what we're looking at is a range here. Price is neither trending up nor down, so I wouldn't be looking to trade this anyway. But you can start to see examples of very spiky price action, which is very difficult to trade. And I do like to avoid trading these kinds of markets or these time frames of markets which show me this tendency for spiking price action, because this is where we can find ourselves getting into the market and we might pick the direction correctly and price might go in that direction. But with all of this spiky price action, we can just end up being stopped out of our trade and then price goes in the right direction after all. So for example, this one here, this bar has moved really high, really low. It could have stopped a lot of people out of a lot of positions, and then price continues on as per usual. But I like to avoid trading price action like this, which is why I tend to focus on the slightly higher time frames. Even on the hourly time frame, we can see quite spiky price action sometimes on these cryptocurrencies. So that's the reason why I choose to trade the higher time frames. But by all means, it is available for looking at, and certainly very interesting to watch what's happening. If you do see a news release, it's very interesting to see what's happening on the lower time frames. But I tend to keep my trading in the interests of risk management. I tend to keep my trading on these on the slightly higher time frames. So this one again, at the moment, Ripple is currently not trending. So what we want to be doing is not forcing ourselves into any positions where we're finding the market's not trending. We want to be making sure that we're just waiting for the market to show us a direction, and then we go with that. So for me, it's simply a case of waiting for a trend to form, and whether that might be from here a series of higher lows and higher highs that I can start trading once my moving averages are agreeing with me, or whether it might be a series of lower highs and lower lows. But certainly this sideways price action is not particularly exciting for me in terms of trading. It just gives me a bit of a breathing space, and I'll put my horizontal levels on that are relevant to me, and I'll make sure that I set up alerts so that if price does reach those levels, I know to look back at the charts and make sure that I'm getting into any technical trades that I see. So hopefully that's given you an overview of how to analyze the cryptocurrency markets and what they look like on MT4 with ATFX. And, you know, if you want to know more about that, then I do encourage you to throw questions at ATFX. They've got a fantastic customer service team who will be more than happy to help. So I'd just like to take you back to the presentation very briefly for a final slide, a final few slides. So hopefully you have my screen back now. Just a little bit more about ATFX. So why choose ATFX as a broker? Well, ATFX are regulated by the Financial Conduct Authority, the FCA, so that is essential if you want to be trading. They have an efficient, secure, easy-to-use payment portal. ATFX is committed to providing competitive prices for our clients. Global investors' most widely used trading platform, MT4. So MT4, you've had a look at it now. I haven't really shown you a thorough look at what MT4 is capable of. I mean, that it really is a fantastic platform to use. So the fact that ATFX provide that platform for you is really fantastic, because that's personally what I use for my trading. And bespoke customer service and trade support for all client trading needs 24/5, which also is very important, because not all of us are trading just during 9 to 5 hours. So, you know, that's a really nice thing to have. So the contact details that you might need if you want to open a live account are here for you. There's the address. A couple of phone numbers for you. From inside the UK, it's 0800 279 6219. From outside the UK, it is +44 203 957 7777. The hours of those phone lines are Monday to Friday UK, 9 AM to 5 PM. And then inquiries, email addresses there, and a support email address for you as well. And of course, you have David's contact details as well. So please do make the most of those. And we look forward to seeing you in further webinars, and we look forward to having you benefit from the availability of cryptocurrencies at ATFX. So thank you for spending your time this evening with me, guys. Thanks for your questions as well. It's been a pleasure, and I do hope to speak to you all soon. Have a good evening.